So you'll find this interesting. Mortgage rates, yes, just dropped to a 3-year low, 5.99%. Buyers that have been on the fence are jumping back in, and understandably so. You may be one of those. However, the scary part is people aren't being told how this is going to affect competition, payments, and most importantly, the negative impact it's going to have on home prices. You see, if you've watched any of these videos, you'll know that I always say they left the mortgage interest rates too low for too long because people got very adjusted to that and comfortable with it. That means that mortgage interest rates never went over 5.25% for 13 years. And so that caused people to buy more homes. And when there's a demand and people are buying, those payments were affordable. And then all of a sudden they're like, oh, inflation's moving too fast. A gallon of milk's $12. We gotta stop. They put the brakes on it and they literally doubled the rates. When they doubled the mortgage interest rates, it put a freeze pretty much on housing. Now, as a result, the interest rates have come back down, and right now they're at 5.99%. So let me give you some perspective on that. If you bought a $300,000 house last year, you'd get a 7% rate. Right now it's 5.99. The difference is on a $300,000 house, principal and interest, you'd pay $19.95. On a $300,000 house at 5.99% interest, you pay $17.95. The difference is $200 a month. And when you add up that the average person's living in their home now for about 12 years, and there's 12 months times 2 times 12, you'll realize that you're saving a whole lot of money in that 1% interest rate difference. Now, please listen to this because this is really, really important. Mortgage rates, when they drop, the prices of homes tend to take a while to catch up. So you're gonna see a 4 to a 6 month window. Rates dropped and they're probably more than likely going to drop again. We may see 5.75%. That may be fall of 2026. But as of right now, people have to understand because everyone gets caught up in the rate. I get it because it's like, oh, I want a lower rate. I want a lower rate. It's almost like a game. But you have to understand, like right now, if you get a 5.99 rate on a 30-year fixed note, for every $10,000 that you borrow, it's $60, 60 bucks. And literally for every $100,000 that you borrow, it's 60 bucks. Now that's your principal and interest payment. And you have to know what the taxes are on the house, what the insurance is on the house. And if you don't put 20% down, whether it be an FHA or a conventional loan, you're going to have to pay PMI. But you have to understand that PMI is not crazy expensive. You're talking, I mean, don't get me wrong, it's not cheap and it adds up. But the difference between the PMI payment on a $300,000 house and the money that you're saving in the rate pretty much covers it. Now, please understand, I'm a big fan of putting 20% down on any piece of property, but you have to understand, if you're gonna buy a $400,000 house, 20% down, that's $80,000. Takes a whole lot of money, right? I'm sure you'll agree. Give me a thumbs up. Here's another alternative. So, quite simply, home prices are gonna go up. And an alternative to putting 20% down is you can get a conventional loan with just 5% down, or you can go FHA 3.5% down, and the seller can pay your closing cost. Now, if you go conventional, put 5% down, once you pay down the mortgage, the home goes up in value, you're going to gain equity. Once you have 20% equity, and you'll know that by kind of watching it, looking at the Zillow's estimate, which is up or down, it can be really wrong a lot of times. Most importantly, you can have a real estate appraiser pay them a couple $100, say, hey, can you just do a quick market analysis on my home and tell me if I got 20% equity? Once you have that, it's simply calling the mortgage company, telling them, they'll have an appraiser come out, appraise the house, and literally just like that, it'll be taken off. That may take 3 to 4 to 5 years. However, it may not, because here's what's going to happen to home prices. They are going to go up. We're going to see a surge. We're going to see a demand. Mortgage applications are up 31% in the last couple of months. And so as a result, you're going to see more people buying houses. But here's what you have to understand. It takes a while for the market to catch up, because right now we're seeing a pretty much stable market, stable with prices. Some areas are higher than others. Some areas like Columbus, Ohio, for example, there's bidding wars on a lot of homes, especially under the $350,000 range. Some areas like Florida, you may be in these areas like Florida, some parts of Texas, California, the home prices are actually starting to come down, because those are areas that a lot of people bought homes. They bought second homes, Airbnbs, and that sort of thing. So those prices, real estate, I always tell people, is hyper local. It truly just depends on the market that you're in. Now, a good question to ask is, how did we get here? How did we get to 5.99% rate? You see, President Donald Trump said he needs Fannie Mae and Freddie Mac to buy $200 billion in mortgage-backed bonds. And so the way that works is you have Fannie Mae and Freddie Mac they basically buy loans from lenders. So a lender will give you a loan, and this has probably happened to you, where you'll get a loan, you bought a house, you got a mortgage, and within 60 days, sometimes 6 months, sometimes 2 years, all of a sudden there's a different owner. And the reason why there's a different owner or different mortgagor giving you the mortgage and who you pay your mortgage payment to is because they basically sold that. So what Fannie Mae and Freddie Mac do is they buy these mortgage-backed securities, and then they sell them, people invest in those. And whenever you take 200 billion with a B and you start buying those mortgage-backed securities, that frees up more money for banks and mortgage companies to lend to you. And when that happens, quite simply, it frees up the money. And when it frees up the money, banks want to loan you money. You have to understand, 2025, 2024 was the lowest year for refinancing and for home purchases. And as a result, banks need you to go buy houses. That's how they make money. Now here's something I'd like to get your opinion on, and they're kind of toying with this, and I really think they should. You see, it's been literally 30 years since they upgraded and changed the capital gains tax. So if you sell a property and you have over $250,000 gain and you're single, you got to pay taxes on that money. You pay taxes anything above the $250,000 gain. If you're married and you sell a house and your gain is $500,000 or more, you have to pay taxes on any gain, any amount that you make over $500,000. So you see, you got a lot of people that are living in $1 million, $2 million, $3 million homes that would love to sell their home. However, they're like, well, man, I got to pay taxes in addition to having a higher rate if I were to get a mortgage, even if you pay cash for something. So a lot of people say, well, Wayne, what about this whole sell a house, you don't have to pay capital gains? That's not the case. That went out 30 years plus years ago. Not sure the exact year. If you do, chime in. I think it was 96 or 97 they changed that. Bottom line is this: you can sell a house that you bought for $400,000 for $1.1 million. You're exempt for the $500,000, quite simply. There's a little bit more to it than that. Not a tax attorney or anything like that. But you have to understand that you're going to have the gain on $100,000. You're going to have to pay taxes on $100,000. And it doesn't matter if you move up to a larger house, spend more on a house, or you downsize. Now, I'll give you my opinion, and I'm sure you have one too. I always tell people opinions are like noses. Personally, it just kind of chaps me a little bit that I buy my home, I can live in a home. This is not my home. I'm just walking around a house. I'm in real estate business, have been for 30 years. If I own my home, and I own my home, I bought my home, right? And I've paid for it. I paid interest on it. I paid taxes on it, paid insurance on it. The government hadn't done anything to it. And if I sell it and make a profit, I got to pay the government money. I just have a problem with it. It's my personal home. It's my personal residence. I didn't use this as a business. I didn't pay taxes along the way. I'm not flipping the house. They even have a law that says that if you sell the house in less than 2 years, you pay taxes on that money. So here's the thing. A lot of people say, well, as long as I buy a house and sell it. No, dude, if you buy a house and you live in it less than 2 years and you make a profit, you're still going to have to pay the gain. And that's what I tell people. You have to understand the laws a little bit. I'm not an attorney. I'm not a CPA. I'm just a real estate broker that's helped thousands of people in 30 years. And I think people need to know this information. No one teaches you it in school. You got to take 2 years of Spanish. Most of us can't count to 10 in Spanish. But they don't teach you money. They don't teach you about real life resources and real life mortgages and payments and compound interest and simple interest and all that. You have to go to college for that, and even some colleges won't even teach you that unless you specialize in business or finance. Now, I don't mean to get on my high horse, as my grandmother used to say, but I get a little frustrated because they don't teach this. You'll probably agree the banks run the country. That's why they have the biggest buildings, right? But you always have to understand and know this, learn this, and try to figure this stuff out. Like right now, Trump is trying to make homes a little bit more affordable. But at the end of the day, no one can push down prices but the market. People have to understand that homes are priced the way they are because of the market. And the market is the people buying. You know, the old saying is, oh, a home's only worth what a seller's willing to let it sell it for. Well, it takes a buyer to be able to sell a house. So you can price it anything you want all day long, but a home's only truly worth what a buyer's willing to buy it for, because that's where the comparable data comes from previous sales. Just like a real estate appraiser is going to look and say, what'd this house sell for? What'd that one sell for? I want to put this one on the market. Well, 6 months ago, that one sold for that. They look at bedrooms, baths, square footage, all of that, amenities, doesn't have a pool, and then they determine the appraised value. Well, what happens is when that one goes up a little bit, and this one goes up a little bit, and this one goes up a little bit, next thing you know, you got some people, maybe you're one of them, maybe you know of somebody that bought a house 5, 6 years ago, and literally the home has doubled in price what they bought it for. Now, something else you have to understand is what they're trying to do, and they've mentioned it. Whether or not they'll do this, I don't know. They're just throwing a bunch of mud and hoping some of it will stick. They said they want to talk about a 50-year mortgage. I'm just curious what you feel about that. A lot of people are like, dude, there's no way. Well, it's no different than interest rates. When more people are buying houses, prices go up. It will help make homes a little more affordable, right? But you're talking 50 years. I personally don't want to do that. I always tell people, put it on a 15 if you can, right? Stretch it out. Get that thing paid for quick. You'll pay a lot less in interest. But what it boils down to is if you can buy a house, because some markets are extremely expensive. Denver, Colorado, for example, a starter home there is $500,000. I mean, even if you put 5% down, you're still coming up with $25,000, even if the seller paid closing costs. And you know what the payment's gonna be? Like if you put $25,000 on a $500,000 home in Denver, Colorado, your payment's roughly gonna be about $4,300 a month. Is that high to you? Give me a thumbs up, leave a comment. It's certainly high to me. Now, don't get me wrong, you can buy a house, put it on a 50-year term. If your payment's lower, and it probably would be, then you can get in the house and you can always refinance later down the road, especially when you have equity in the property, get your PMI taken off, all that good stuff. You're gonna pay more in interest. My only concern with that is when you, for example, get a 30-year loan as opposed to a 15-year loan. So right now, if you got a 30-year loan, you're gonna pay 5.99%. Fixed rate, 30 years, right? And you wanna make sure any lender that you talk to, if you're out there and you're thinking, man, let's go, now it's time to buy. I mean, we can help you with that. If you can go to contactwayne.com, shoot us your information. We can position you with a good agent in your area and lenders as well. But if you have a lender, you go to Rocket Mortgage, it really doesn't matter. You just wanna make sure that they quote you a payment with no points and no origination fee, because they'll quote you something and it won't tell you the details and won't tell you the fine print. You gotta read all that. But no different than anything else, if they do a 50-year mortgage, you can't help but wonder, wait a minute, the difference between 30 and 50 years is 20 years. The difference between 15 and 30 is 15 years. And right now, if you did a 30-year, it's 5.99. If you do a 15, it's 5.25. You see, you get a break on the rate if you put it on a less term. So if you get a more rate that you pay, so the rate increases when you go from 15 or 30, then what's the rate gonna be if you go from 30 to 50? I would imagine it's going to be more. So is it really going to be a savings? So I got a question for you. If you're going to buy a house and you could afford to buy a house now because the payment may save you $150, $200, would it be worth to you to put it on a 50-year as opposed to a 30, just because it may save you $180 a month? But you're putting that on 50 years. I'm just curious what you think. So I've got another interesting statistic for you. And listen, if you watched this far, I am more than grateful. Thank you so much. I've got a lot of subscribers. I think we're about 525,000 now. My goal is for 1 million. Bottom line is, I just want to help as many people as I can, because I just feel like you learn something, then you master it, and then you teach it. That's the way we're all supposed to be. We're supposed to be teachers of men, teachers to people, so we can learn it, master it, teach it, and share it. What I discovered the other day, and this is a crazy interesting statistic, is 79% of the people that watch my videos, I average about 1.2 million views a month on my YouTube videos. 79%, you may be one of those, they're not subscribing. It's free, doesn't cost you anything, no one's gonna email you anything, we don't get your information, it's literally just clicking the subscribe button. So I got a favor, if you like this video or any of the other videos, hit the subscribe button. Most importantly, leave your comment, because your voice matters. Give me a thumbs up. And if you feel like someone can benefit from these videos, click the share button and shoot it to them.